to send out the last messages. Making sure everybody comes on. All right, so to not waste anybody time. So this is Bitcoin's chart on the monthly time frame. And the reason why I zoomed out to the monthly time frame is because we're no longer making a weekly correction, right? So Bitcoin has a history of making 70 to 80% sell-offs. And I want to go through that and show you guys that today. So for whoever is here, I can't see who is watching or anything right now, but I'll just keep giving the lesson. All right, let's go back on the monthly time frame. So we're on the monthly time frame right now. The blue and the orange line is my 12 and 26 EMA. So the blue line is the 12 EMA, and that stands for what price has been doing over the past 12 months since we're on the monthly time frame. Or if we go down to the weekly time frame, it's what price has been doing over the past 12 weeks. And if you notice, when I go on the weekly time frame, it already crossed bearish, right? So staying on the weekly time frame now, I'm going to start drawing my support resistances on Bitcoin just to show you where we're coming from and where we're going. So the top area, this is a resistance area rejected. This is another resistance area rejected. This is the strong support we're just holding of 31K, 29K. This is the high of 2018, the first major Bitcoin rally, right here at 19K, 20K. So what's happening now is, to zoom in, Bitcoin broke all these levels. So we broke 46K, we broke 31K, and now we broke 19K. So the thesis is, once we break a support, we naturally attract to the next one like a magnet. So if we go back to the left in history, we can see that we also had a rejection right here at 16K. So you see how this resistance line is right here in 16K? If I go over, we did break out here, and now we broke back in the range. So 16K right here is the next support that I'm looking to hold for Bitcoin, right? All this sell-off right here, the red sell-off, the red candles, these sell-offs right here is literally called capitulation candles. And that's when a lot of people are running to the exit at once because of fear, right? So all in all, let's go back to this point right here. So if we study the Bitcoin run from 2017, 2018, you'd see that we have a similar parabolic run right here. So we just broke out from 4K in September. And by that same year, December, we got to 20K, right? So Bitcoin ran crazy that year. So the more the stock run, especially if it's a growth and speculative investment, the harder it comes down. It's like growth stocks in the equities market. So in 2020, we hit 2018, we hit 20K. We came back down, we tested 16K, we made a lower low, we made a lower high right here at 1150. Long story short, if you look right here, the lowest Bitcoin got to, this was in, the date is below, down here, you can see it. This is December 18th, December 10th, 2018, right? So Bitcoin dropped from 19,000 to 3,000. So that's still a big 80% decline, right? So Bitcoin is used to that. So with that being said, there's 4 major market cycles that I talked about before. And this is the early trend when it starts to ramp up slowly. This is the parabolic trend when it goes crazy. The parabolic trend is when everybody starts to run in, like Bitcoin gets aired on CNBC. You know, everybody's talking about buy crypto, your friends telling you to buy crypto. This is what causes these parabolic movements, right? And another reason why Bitcoin goes parabolic is because of the size of the market cap. So I'm going on coin market cap right now to show you guys the size of the Bitcoin market cap. And it's literally the fact that the market cap is dropping so fast. We're just at $3 billion a day. Now we're at we're just at $3 trillion a day. Now we're at 891 billion, right? So we had a small, we had 891 billion, right? So that's very, very small for the overall cryptocurrency market cap in general, right? So altogether, if you go to the, I'll go to this thing right here, stock analysis, I can show you guys that Apple's market cap alone is $2.13 trillion. That's way more money. There's way more money combined for Apple stock alone compared to overall cryptocurrency. So what's going to get the Bitcoin market to start moving? What's going to get the Bitcoin market to start moving now? And what's going to get the cryptocurrency? Sorry, I'm just looking. I was checking in. What's going to get the cryptocurrency market moving now is when the banks start to step in. And the banks are all on the sideline, ready to step in right now. So they're some of the main people that cause these type of sell-offs. So we ran a parabolic, we had a bear market, bear trend, then we consolidate. This is what I'm talking about when I say consolidation. We started moving sideways from November 19th, 2018, all the way to April 19, 2019, before we broke out. So almost a year, we're moving sideways for it. Then eventually, we start having a slowly ramped up again, the early trend right here. Then we went parabolic again in Bitcoin. This is this year, 2021, this recent time went parabolic. We went all the way up to the high of 64,000. Then we made a higher low. Then we went all the way up to 66,000 before we reject. That was the highest bid, right? So look at this. If you guys knew technical analysis or paid attention to your EMAs, whenever the blue line crosses the orange line, bearish, that means it's time to get out of the investment. We're on the 1 week time frame now, and the EMAs are trend following lines. They're for trend following traders. So if you use the EMAs, you can follow the trend. Great. So you would have got out of Bitcoin from 47,000, and all of this would just went down, and you would miss out on all these losses. But the point is, for people that's holding Bitcoin still or stuck in cryptocurrency altcoin positions, an 80% decline is natural. It's from 65,000 to 17,000. We're not fully at 80% yet. We had 77%, 76% decline, but we can go down to 16K is a point. So now, with that being said, after the bear market, we need to see, some consolidation in this area. And when we see some consolidation in this area, that's when we need to go again, get a chance to redo the cycle all over again, right? So that's exactly what's going on right now in the Bitcoin market. So we're going to go to about 16K. The fact that we broke through 20K so easy, I do think we should go to around 16K. And if we break 20K, if we break 16K, I mean, we're going down to the 12K region next. If you look to the left, you can see this is a support area. All in all, we can't buy in this current position right here, right? We can't buy when it's coming down like that, because then we'll be catching a falling knife. So if you buy Bitcoin right here at 17,000, not saying it's a bad idea if you plan to scale in little by little. So if you want to buy now, for instance, catch a falling knife, whatever your position is going to be, if you want to put in $1,000 total, $4,000 total, split your hands into 4. So buy some today, buy some next week, and probably empty out the rest of your position next month. Get a good position at the bottom of the trend, so you can ride the full move back up. This is how you make money in investing, right? Everybody wants to buy high. Everybody wants to buy when it's 60,000, 55,000. They still want to buy. Man, I wish I bought Bitcoin. And now Bitcoin's at 17,000, issuing another discount. And I don't see no one talking about it, right? But that's why 90% of people don't make money in stocks, because they try to follow the herd and the hype. This is the time to be paying attention to Bitcoin and cryptocurrencies. This time to buy when it's at the lowest. You'll be the first one in and the only ones in at this point when we start to ramp back up again. So that's just a quick review in the cryptocurrency space. So let me go to the stock market space now to show you guys a review on the stock market really quick. This is Ethereum, by the way. Ethereum all dropped from 4,670 to 906 right now. So this is the S&P 500 chart. I have it drawn up already because I follow this chart pretty much every day, because this chart mirrors the economy, right? So I'm just going back in time to show you guys a little bit of what happened in the previous financial crashes. Like I said before, this is in 2000, the dot-com bubble. The market was on a bull market. This is a stock market, right? The market's on a bull market, and we rejected 156, and we had a bear market from 2000 to 2002. That was a dot-com bubble. This is when people started thinking the internet was fake and the internet was never going to be something big. So they made fun of it, same like how they do in cryptocurrencies and Bitcoin. Then we eventually broke out of that, made an upturn again. This is the 2007, 2008 financial crisis, similar to what we're having right now with high inflation, high interest rates, high gas prices. So went down, eventually we broke out of that trend and we made new highs, right? COVID-19, right here, we made a low, we eventually corrected and made new highs. So here, what I want to show you guys is I'm still on the monthly time frame, so each candle equals a month. If I go on the weekly, I'll show you that we broke out of this inverse, this actually head and shoulders pattern. And this head and shoulders pattern is a reversal pattern that appears on the top of a trending market for a reversal. So it signals a reversal. So once I saw this pattern forming, once I saw the right shoulder that we didn't make a higher high, I know that the market is weak and we're going to go into a bearish trend. So that's what's going on right now. So currently the S&P 500 is in free fall as well. So how do I know now when is a good time to start buying stocks? Yes, some of the stocks are already oversold. They're already on discounted prices because they started to sell off before the market crash happened. So I already started buying those stocks already. But all I do, I take my Fibonacci tool. I'm on the monthly time frame, and I draw it from this recent swing low to the high. So I'm drawing it from a pivot low to the pivot high, and I see that currently we're right below the 38% fib level, right? And what the Fibonacci tool is, it's used to measure the retracement of an investment. So after impulse up, we have to get a retracement down. And after impulse down, we got to get a retracement up. So the fib tool helps you to show you where would price come back to when it's reverting to its mean. So we can come down to 50%, which is 349 for the S&P 500. And we can also come down to 61%. This is the natural sweet spot where everything normally comes down to, this area. So between 346, 324, this is where the S&P 500 should come down to before we get a bounce. And if the S&P 500, which is the benchmark index of the top 500 stocks in America, if this comes down to 336 in this area, stocks will come down as well. But I'm telling you, I'm buying when it comes down to this region. So once we make another leg down, one more leg down, I'm starting to put positions in before we consolidate, because that would be a good sign that the market is getting ready to flip, right? So back over to the Bitcoin chart. For those who just got on, as we reviewed, Bitcoin could come down to about 16,000, 12,000 region before bouncing. But the thing with the cryptocurrency market cap and the cryptocurrency market is the fact that this is a very new market, like we're saying, and not a lot of big investors are in, and not a lot of big money is in as yet, like the banks and the institutions. Banks and institutions, they bring trillions of dollars to the market cap. So what they do is, insider trading is real. Let me say that. Insider trading is real. What they do is they all come together and they help to put these fear articles out on CNBC. They know a guy on CNBC and they say, hey, Jim Cramer or whoever is on there and say, hey, we got some articles to release, you know? So it's literally a part of a plan. They get a journalist to write an article and they put a lot of fun articles on crypto and they make the coins go down. They did the same thing. They've been doing this since 2007, 2008, like from a long time in the early days when crypto came out. And they're still doing that now because a lot of people still don't understand the full concept behind why, you know, Bitcoin even exists and what they're trying to do. And they don't understand the supply and demand factor behind it as well. And they don't understand that, hold on. Yeah. So they don't understand the supply and demand factor, and they don't understand that the market supply and demand. So right now they're putting fear out, driving down the market. We're going to consolidate and they're going to, everybody, all the hedge funds, all the institutions that want to buy in, 64,000, 65,000 is way too high for them, right? So they want Bitcoin at these prices, which is 70, 80% from the highs to buy in first. Once they buy in, they're going to start scaling in. This is called the accumulation phase of the market. So once they start scaling in, you're not even going to realize that the bull market's back because we're going to be consolidating similar to over here. Because like I said, this market cycle happened before for all the new people watching. We ran up from 4K all the way to 20K in 2018. We made a dip, made a correction to 16K, then 12K. These are the areas we created in the past. And this is the accumulation phase right here, 3 grand. So Bitcoin dropped from 19 grand to 3 grand, right? And this is when all the institutions were buying in, right? No one was paying attention. Everybody was looking at the other opportunity, you know, whatever it is, trucking, you know, Forex, whatever it is at the time, because that's how human nature is. People like to follow where their attention is. So to be an investor, we have to think the opposite of the crowd. If you want to make money in stocks, you got to say, okay, no one's paying attention to this right now. This is where I need to be buying in. And that's exactly why Warren Buffett say, be fearful when others are greedy and be greedy when others are fearful, right? Because look, right here, others are fearful. This is accumulation phase. Everybody starts scaling their money, the hedge funds, the banks, and then they push it all the way up. We break out right here. Once we break out of this resistance, 11,000, FOMO starts to kick in because people have been watching at 3,000 and they didn't want to buy in. They're saying, should I buy? I don't know. It's really low. It was at 20,000 because they don't understand the history of the market. When it broke 12K now, this is when people start to buy in. So now at this point, everybody's saying, hey, buy Bitcoin, 21K. 30K, buy Bitcoin, buy Bitcoin. Everybody's pushing up. The banks, institution, everybody's pushing up as well. They're doing their insider trading. We made the first dip, made a rebound, a small fake out. And then as soon as you see this right here, this big red candle, that's called a bearish engulfing candle. That candle right there signals that there's a lot of selling pressure in the market. And we're making a higher high, higher low pattern right here. Higher high, higher low. That's keeping the uptrend, right? When you make higher highs, higher lows, higher lows, the uptrend, the market's trending up. That's what we want. But in this case, we broke this support and we made a lower low right here at 36K. Once we made a lower low at 36K, let me draw my fib from the swing high, swing low. Automatically expected us to make a rebound to this level to retest. And once we rejected, that's immediately when I know the bear market was for real. We came back down to retest 31. We broke through 31. We came to 20K, we broke to 20K. So that's me basically reading out what's going on in the market. So we're still in a bear market. We're still cash in a impulsive phase. We don't see no sign of the bulls. We need at least one green candle to show up like this. Like one green candle. Yeah, for us to say, okay, there's some type of support has held because a green candle has closed. The buyers are in, right? So if you are holding crypto projects and they're really, really low, really, really low. It depends on what you're holding, right? So since we're on it right now, it's very important to focus on the top 10 cryptocurrencies because market recessions and market declines do leave some companies bankrupt, right? So we just got to make sure that we're holding the right ones in the first place. And a simple way to find out if you're holding the right ones, I have to refresh this chart. A simple way to find out if you're holding the right ones is looking at the top 10. The market cap is only 7. Wow, this dropped 798 billion. That's not even 1 trillion. Apple's market cap is 2.1 trillion right now, the whole company. So Cardano is in the top 10. I like Cardano. Ethereum, I still love Ethereum. Nothing fundamentally happened why this market's coming down. It's just a part of the cycle. Like the fear in the market in general is causing a lot of sells, right? Cardano, Binance Coin, Solana, XRP. This one recently came in the top 10. DAI, I haven't done no homework on that, so I'm not gonna tell you, I don't know nothing about it. But I know about Avalanche and a few other ones, Polygon, but we'll leave it there. You guys can do your own research. So this is Ethereum's chart. Ethereum is also in the impulsive phase. But let me tell you, in terms of a trade now, see something. In terms of a trade, give me 1 second. In terms of a trade, when the green candle do come up, I do expect a bullish recovery bounce to happen shortly. So I'm going to draw my fib from this and my low. So I do expect us to bounce to test 31K shortly. So if you're a trader watching this and you're looking to take out a trade, would have to go down to a smaller time frame, a 1-day time frame. And this time frame just means each candle equals a day. And then when you're on the 1-day time frame, you just need to, you can take a small move for this swing. You see how I made an impulse down? And I told you guys that fib is used to measure where the retracement is going to be. You could, if we get a green candle close right here, there's an 80% chance the next candle is going to bounce and come all the way up to the 50%. That's how I take most of my trades when I'm trading bullish in a bear market. But the best thing to do when you're trading a bear market is wait for us to make a lower high to enter, which is like an example like this. Made the impulse down, made a lower high. If you had entered a sell right here, you'd be able to cut all this move going down. So I only caught some of this move, but I didn't stay in the entire move. Right. So let's see. Stock market. Let's see if there's any stocks I can go through and show you guys. So let's look at Apple, for instance. Apple is like the biggest market mover in the market, like the company, the biggest market cap. If Apple is correcting, there's something going on in the market because Apple don't normally correct that heavy. So the fact that all of the indexes are going down and everything is going down, Apple is going down as well. So if I draw my fib like this, I can show you guys immediately, like off the rip, that Apple could come down to 102 and 118. But definitely Apple was going to come down to at least 118, minimum 102. So when Apple comes down to those levels, that's what I'm interested in, again, to buy for the long term. Because Apple is a company, you can trade it, you can day trade it, you can trade options with it because it's very liquid. But it gives an annualized return of 38%, 40% a year on average. It's been given consecutively. So I'd like to hold that stock in my portfolio as much as I can. If you look into some of the hedge funds portfolios, like recently I saw that a lot of them added more Microsoft and more Apple to their holdings. So they're not even waiting for this to go down and hit these areas. They're already starting to stack orders. They're already starting to buy here. Come back, buy here. You know, that's their play. That's their plan. They're literally buying into weakness because when we do bounce after you buy into weakness, we're going to go back to new highs because I do expect Apple to go to at least $200 soon. Well, 260. 260 is my next target. Analysts expect Apple to go to like 420 though by 2023, but I'm giving you guys a conservative look at it. So yeah, these stocks are still coming down. If you don't know how to read charts, I'd suggest you wait a week or another month or so before you start looking to buy into stocks, because everything's pretty much impulsing down now. Candles are fully red, no consolidation. So in terms of buying companies, the first companies that's gonna bounce is the blue chip ones. So Apple is gonna bounce first before anything. Walmart is coming down heavy now, but Walmart should bounce. Coca-Cola is a good one to bounce. See, it's really strong. It haven't really incurred a lot of weakness, you know. Let me show you Coca-Cola's chart zoomed out. Coca-Cola has just been on a long-term uptrend. Regardless of the market decline, Coca-Cola is like higher highs, higher lows, higher highs, higher lows, just trending up. So that's good. That's a good long-term investment for you guys that's here today. Some good growth stocks investment. Airbnb is a good growth stock investment. AMD, good growth stock investment. Amazon just split recently. They're at 106 right now. This is a great point of entry, but Amazon is definitely a good growth stock. And they're on a discount. Let's see what else. Give you guys before you go. DoorDash is a great growth stocks. And when I say growth stock, I'm telling you, these are going to be the stocks that's going to outperform after this market crash. So this is a repeat of 2008. I know a lot of you guys heard that a lot of people made millions off stocks and real estate invested during the crash. And this is here. DoorDash IPO'd at 136 and DoorDash is at 61 right now. That means it's below IPO price, right? So this is one of the cheapest you can get an investment when it's below IPO price. Because just imagine, right? This is Google. Google is another great investment. It's right at the 61.8, right at the area I like to buy in, right? Right when it's about to split too. So if you look at the extended time trend, Google stock has just been trending up consecutively over years. But Google haven't took a dip as severe as this one since it's been trending up. So this is why everybody is saying, and not even everybody, I understand why too. This is the buying opportunity of a lifetime. Everything is giving you a good opportunity right now. And the reason I'm on Google chart, I'm just showing you that. Imagine if you bought Google when it just came out, when it just IPO'd. I can't even see no history back here. This is $41. Well, it's $41. Say you bought like 30, 40, or 50 slowly. That'll be worth a lot when it went up to 3,000. So you would invest $41 and those shares would have became 3,000 each share if you bought Google at that price. And that was 2004. It's pretty far. It's 15 to 20 years. That's why they tell you guys long-term investments pay the most money overall. Because if you have the discipline to buy DoorDash, Airbnb, Uber, those good growth stocks, Zoom from right now and hold, I'm not saying they'll all go to 3K per share, but I'm telling you, Zoom Video, for instance, IPO'd at 74, and it's right at 105, 106 right now. Like, this is the cheapest you can get these investments, close to or below IPO price. Lucid Motors, I don't know if it's going to be bigger than Tesla, but I definitely know this growth stock right here is going to do something because they're in their own category of electric vehicle. They're in the luxury section. And it's like in the regular car industry, you have BMW, you have Mercedes, you have Ferraris, and you have Lamborghinis. Some people just buy high-end cars. So Lucid is the high-end version of electric vehicles. I'm just running through this, my first live. I'm just trying to give as much value as I can. I don't really have a special script. Microsoft. As I said, Microsoft, hedge funds have really been adding Microsoft to their portfolio. If you look at the decline it recently had, they haven't had a decline that strong ever. It's just been a beautiful uptrend. But this is a buying opportunity, a great one. That's why hedge funds are jumping in, because buying opportunities, when you get buying opportunities in the market, you got to think about it like a glitch. It's like a lucky moment, you know, where you got to really like hurry up and jump in. Investors know this because they understand that right now, what's fully going on in the economy. Look, see how much viewers I got right now. See if it's worth to say this. One second. So right now, NIO is also a decent one, decent growth stock. It broke out of its downtrend recently, and it's going higher. So all in all, like, I hope you guys understand the market cycles and understand this is supply and demand. The reason why stocks and crypto are going down right now, the amount of stimulus that got gave out and so forth, added to the hyperinflation that we're going through right now. And with the Fed raising interest rates and so forth, there's no borrowing going on right now. And how big companies spend to, you know, on their marketing, on their products or business, they take out loans, they borrow money. So if the interest rates are high, they're going to be less borrowing. And right now, inflation's high. So it's a small amount of consumer spending. So because of that, not say a small amount, consumers are still spending right now, but they're backing off the pedal. So the economy is pricing that in and saying, okay, it's time for the market to correct, to let some new money come into the market. So that's the idea. So I hope you guys enjoyed this session, and I hope it added some value to you guys. And I'll do a lot more of this down the line, better and more efficient. So thanks for everybody that's coming out. Do we have any questions? Is there any questions before I get off this? 5. Let's see. No questions? All right, so we're gonna leave it here. NIO already broke out of its downtrend. So I expect NIO to get back up to $31 eventually, because once we break a support, we normally retest it as resistance. Thanks for watching. Happy to everybody that came out. Hope you guys can use this information to do something good with it.